Good morning, Academy 55 members and everybody else who's watching the recording. David Kahn here on Tuesday, the 7th of October. It's now 4 minutes to 8 in the morning. We're looking at the adventures of the EUR USD on the 1 minute time frame following the Academy 55 indicators and strategy. Well, first of all, what can we see here? Well, we can see a whole load of sideways movement, which is not a surprise because that's 80% of the time anyway. So let's go and have a look and take the indicators off for a minute and have a look on the 5 minute time frame. And as you can see in the 5 minute time frame, at least here's the sideways movement we're seeing, but at least we're in the buy zone. So we'll be looking at the next buy alert. So with that being said, put our indicators back on, go to our MT4 and make sure you've got your risk to reward in purple, your lot calc in purple, and if you've got the latest version 10.27, turn this FN on, and then you get to close all the trades as necessary. Keeping 2.2 pips away, minimum. Put the lines on. 2.2. I forgot. So I'll write that again. There we go, back to 2.2. And right here is where I would want my stop loss. Of course, you need a buy zone. And you need, you need a buy alert and everything to turn green. And I would like it to get above that level there for obvious reasons, because that is the consolidation happening. At 8 o'clock, we might get a bit of volume kicking in because of London opening. May do, may not, don't know. But yeah, it's looking for a buy. The euro's not doing so well though at the moment because of problems politically in France. Can't get their act together. They've got their economy's in trouble, and that is possibly dragging the euro down, amongst other things. So maybe we might get a bit lower yet. But we're in the buy zone here. But so we need more confluence, i.e., at least being above this area here. But we'll see. It's now nearly 8 o'clock in the morning. Sideways movement all the time. Let's go on the mark that up actually. Let's get the right box. This is all consolidation. Well, we want to be, I'd like to be above there really. But now London's kicked in. Does that mean we're going to get a bit more volume? And as you noted, I've got 0.80 in the risk to balance. It's usually 1%, but I've got it a little bit lower because we've been experiencing low liquidity for several weeks now with the EUR USD. That means because of low liquidity, when you do place a trade, you don't get the exact percentage that you want. So if I was to put 1% what's happening is usually I'm experiencing a stop loss with 1.20, 1.27, something like that. Far more than the 1% I wish to risk. So I'd rather go lower, slightly lower than the 1%, just in case I mean, that'll come in at no, the reality is if I press buy or sell, that'll come in at 0.9 or 5 under the 1%, which I wish to risk no more than that anyway. So that's why I've done that. Just for this time of the year when there seems to be a bit of low liquidity. But like you say, more sideways movement. So with that in mind, let's go and have a quick look at the charts. Um, or do we? Hang on. I'm loath to do that just in case we do have a volume burst and have a bit of a breakout here. We want to be on that really, if that is at all possible. It's a bit close to get away from that at the moment, but all this is consolidation. See that opened up there. That is slippage due to low liquidity. It opened up there instead. It should have opened there. See, but it opened up there instead. All that is caused by low liquidity, which is not ideal, and this is not ideal. But we will struggle on. That's why it's more important, just as important as it is always really to get your confirmations, i.e. price being in the zones. But now we are breaking up. We're breaking to the downside. We knew we were in a buy zone, so we wouldn't want to be taking a sell if one offers itself. So that'll give me the opportunity to at least, you know, that's within that buy zone. Anyway, maybe the London's come in and decided, yeah, the situation in France is a bit more dire than what they had previously thought. So therefore, the euro takes a little bit more of a dive. Although France is not the whole picture of the euro, obviously, it's a pretty big player. So anyway, let's go to the 4 hourly time frame. See if we can see what's happening. Let's extend that. Oh, that's interesting. That extending that line I drew the other day. But we'll do away with that. Do away with that. That's an old sell zone. Of course, we're creating imbalances as we go here. Let's put on the 4 hourly time frame. Let's put the line chart on. Oh, let's do away with all those for the moment. Start a fresh week. This is all old lines from last week. So we'll put the line chart on the 4 hourly. Nothing really exciting going on there. That's too far away to even mark up. So we'll go to the hourly. Kind of line there at 1.6962. There's a keystone area, which is and that line there is sort of being respected. Like I say, 1.16967. But that's and this line down here, I guess. Yeah. Got 2 points here at 1.6630. Apart from that, nothing of any great significance. Let's put it on the candles. And we can see here we've got imbalance and balance down here on the hourly time frames. And price is coming on down to meet that imbalance. What I like to do is when we get any significantly high there, put my fibs on from there up to there. And if price gets to this level here, could bounce or break. Going to the fibs. Oh, we could be coming down here to meet these imbalances. So let's go to the 5-minute time frame. As you can see, we have been, ever since the Asian session, we have been slowly going down. And usually, when there's been a sell-off in the Asian session, usually they do turn around. But it depends on how bad this political news is for France and how it's dragging the euro down and how they disseminate that. So we could still be getting into these areas down here. And we were in a buy zone. So we'll be looking for the next buy. We have low liquidity and seeing all this nonsense here, this sideways movement, this just doesn't give you any confidence really for trading, not this time of the day. Nevertheless, we are here. Suppose we'll paper trade this, even though we're in a buy zone. We were in a buy zone. This is riskier trading, of course, because we know that there's a buy zone there, opportunity. Two to one, which is there. 2.2, which is there. Brings your 2 to 1 there, there. And as you can see, that has actually technically done its job. But that's just in hindsight, that's done its job. I mean, the Academy 55 indicators have been successful, but we knew there was a buy zone there. We was coming out all this liquidity, all this sideways movement. And that was a very a riskier trade to take, bearing in mind we only need a very low monthly target to go for, to take pressure off ourselves with the trading. And the reason we take pressure off ourselves with the trading, well, what I'll do is I'll let Steve explain in a short video that he made, explaining just why we go for very take pressure off ourselves with very low monthly targets, and that's what all we need. So here's Steve with a reminder of that.
In this short video, I'm going to talk to you about making profits without putting yourself under undue pressure. And it's why we only have a 10% monthly target inside the Academy. Let's look at the evidence. On a $100,000 FTMO account, if you win 10%, you win $10,000. Now, FTMO will pay you 80% of that. That's $8,000 per month. Now, $8,000 a month is $96,000 a year. If we look at that in pounds, it's the equivalent of £70,080 and the equivalent of 81,600 euros. Now, £70,080, if we divide by 12, that gives us £5,840. And if we take the euro amount and divide that by 12, it's 6,800 euros per month. But what if you only win 7.5%, reducing the pressure on yourself even further? On a $100,000 FTMO account, win 7.5%, you'll win $7,500. FTMO will pay you 80% of that. That's $6,000, and $6,000 per month is, of course, $72,000 per year. Take that figure and divide it by 52, it's $1,384 per week. In pounds, it's £1,010 per week, and in euros, 1,176 euros per week. And this is why we only have the low target of 10% per month. As you can see, even at the much lower target of 7.5% per month, you're still earning a substantial income, making profits without putting yourself under undue pressure.
Thanks, Steve, for that timely reminder. Right, so we were looking for the next buy because we were in the buy zone. And the next buy will look something like this. Minimum of 2.2, could be more than that. And assuming that the red word turns to green, that's where the stop loss will be. 2 to 1 up there. That's the kind of thing we're looking for. That's the kind of scenario. But if they've got the idea that it's going to be a lot worse for France politically, because they're struggling. Their prime minister resigned yesterday, I believe, and all sorts of things are happening in France. Bad news for the euro, it will be. That'll drag the euro down. Not so dramatically as if France depended on the euro depended on France in its entirety, but still not good for the euro. So we turn over to our MT4 and we wait for maybe a bit of a buy. And we've got fair value gap there in balance. So we might go and breach that. rather put it on the trading view at the moment. And we got fair value gap here as well on the on the minute time frame. And also up here. So will they fill them before going down any further? Or are there lots more buy orders down here for them to come and plunder? How bad is the news? How low will it go? We don't know. All we can do is sit, wait and watch. There's a little ray, there's the sell zone. And there's our new buy zone, where there could be loads of orders waiting. Could be. See, there's no time limit for them to do these things. We don't know the time that they need to do these things. That's the only, we know they need to fill out these fair value gaps, which they will, but the time involved to get there, we don't know. So is it during our time together? During a buy trade, if there was will they need to do that during that time? We hope so, but we don't know. What we do know is it needs to be done. So we put our MT4 back on. We're ready. We're waiting. But it's a little bit more waiting than usual with low liquidity that we've been experiencing for several weeks now. Right, so is this the start of the euro having a bit of a fight back? Has President Macron calmed the waters a bit? Maybe. I don't know. So this is where I want my stop loss, just under the there. But as you can see, we are creating imbalances. But we got a buy alert now. But we are equalizing that fair value gap there. Waiting for these to turn green, which they will at any time. If it continues to go up, obviously. But like I say, we're creating fair value gap here. If there's a long-term commitment to go a bit higher, they may want to sort that out before continuing on higher. And try again to go higher. On 2.2 pips away again. See, it's already mitigated that fair value gap there by that wick there, because that's buyers and sellers creating that wick, and that runs more or less corresponds with that. So that's equalized that fair value gap there. And now, are they going to do the same here, or are they going to still continue to go lower because of the euro failing because of things going on? So we've got some counterintuitive news, because we know France is going through a little bit of a political storm, but at the same time, political risks, US government shutdown, cash shadow over markets. So you'd think that the dollar would be failing as well. So therefore, that equalizes. That's probably why we're seeing all this, maybe, because both are failing. The euro is failing because of the political news, and the dollar is failing because of the risks that we've just been told about. So at the same time, you see all this stabilizing movement, which makes sense in your own mind. I mean, if the euro was fighting fit, and then the pound, the dollar was going through that problem, we'd see the euro go like that. Ultimately, if the dollar was doing fine, and yet France had this political, you would see the euro doing that. But the two seem to be cancelling each other out to some degree at the moment. That's what it seems like in my mind. So therefore, we get this that happens 80% of the time anyway. So yeah, difficult. But the good news is, of course, I haven't lost any money. And that's the most important thing. And you get a wee bit of experience of looking at the market and asking yourself a question: why is it doing what it does? And put that there, because in anticipation of the red wave turning green, that's where the stop loss will be. The band is telling us that the sell is leveling out. We can see that by the candles anyway. See how that candle came down there to mitigate that value gap there. There may well be a case to go higher. Have a quick look on the 5-minute chart a moment. Take the see that fair value gap has been mitigated, but we got some the fair value gap up there needs to be put in. Hang on, let's quickly go to this. Quickly go on. No, we won't. Got a green volume ribbon now, showing us there's a little bit of buying coming into the market, but it's still horizontal. I could still turn red, especially if this candle comes down and swallows up parallel SAR, send it above price. Quickly going to go on the 5-minute time frame, just have a quick look. But as you can see, we have imbalances up here, here. When are they going to fill those in? We don't know. Hopefully their desire to fill those in will be within if we took a buy trade, but one never knows. All we do know is historically we've got a 75% win rate because of that if we do take a buy. But now the power of SAR has flipped and more of uncertainty. So really price needs to be up here before I even contemplate a trade to bring the parabolic SAR down below price again, and assuming everything else is green, which it would be anyway. So I'll keep an eye on this on the monitor. Let's have a quick look at what happened yesterday at one of my favorite times on the NAS 100 at 2:30 yesterday afternoon. Put it on the 5. I'll take the indicators off. Put it on the 5-minute chart and go to on the Monday the 6th, 2:30 in the afternoon, which is 14:30, which is there. As you can see, I've already marked it up, but let's have a look. So that's then we put it on the I am looking at the other monitor just in case we do get action on what we're doing today, but not as yet. Put the indicators on. We're on the minute time frame now. That's 8:30. Sorry, what am I talking about? 14:29 in the afternoon on Monday on the NAS 100. As you can see, we've got a bit of a buy. So let's go to 14:30. And we've got a bit of a sell. So gotta be quick. cellular, red, red wave, red trend. That's where the stop loss will be. There's your 2,000 units. And that's a 2%. Now there's a bit of contention here. This, were we slightly taken out with commission? I wasn't in the trade, I admit, so I don't know. But the indicator did tell you it was going down, and down it certainly did go. But this area here is a contention whether it was in or out. I'll leave you to decide on that. But meanwhile, back to, I'll take that off, yes. So that was yesterday afternoon on the NAS 100. Meanwhile, back to the here and now. Waiting for a possible buy, but it's a bit iffy, isn't it? So if anybody's got any questions, they can chat to me via, if you're watching me on YouTube, you can text in the chat there and I'll come back to there and see that momentarily. Or if anybody's got any questions about what they've just seen here, our members who are in the room with me, they can, of course, chat to me if they have any questions about what they've seen here today also. So whatever the case, if you want to got a quick question on the YouTube, use the chat facility there. Or if you're a member of our team, you can chat to me there. Incidentally, for everyone on YouTube, I'm going to paste in a link and you can see a more in-depth recorded webinar of what we have here with Calorie 55. But like I said, it's really good news what's happening today. And the good news is we haven't lost any money. We've been kept out of all this this by the indicators and the fact that what we're recognizing and seeing, sideways movement, all that sort of stuff. Seeing the pitfalls and the risks are more than we would want to trade. But all the time, the euro is because of political events and lack of investment and all that, the euro is getting lower and lower and lower. So maybe it would be a good idea to come back at a later time on the other commodity, the NAS 100, also known as the US 100. And because of that, I'm going to show you this Steve again with the trading assistance setup.
Hi, this is Steve, and in this short video I'm going to just show you the settings for the trade assistant to make sure that you've got the minimum 2 pip stop loss on the Euro USD or any currency pair, and how you set it for if you're trading a commodity like the US 100, because the settings are slightly different. So here you can see we're on the Euro USD chart here. I've got my risk to reward on the trade assistant locked at 2 to 1. I've got my risk balance at 1%. Lot calculator is on, and my little purple button here between the buy and sell is also activated. So we're ready to bring the trade assistant onto the chart. Now you'll notice here that we've got the stop loss set at 20. That indicates 2 pips when you're on a currency pair. And we can actually change that here by typing over it. So if I type in there 40 and just tab off here, you can see now we've got a stop loss of 4 pips because we're on a currency pair. In this example it's Euro USD, but it could be Euro GBP or any currency pair. So let's just put that back to 20 for our 2 pips. We'll click off here, and now we'll just put the lines on so that you can see that is showing us 2 pips over here on the actual tool, ready to actually get involved with a trade if that's what we were going to do. But that's not what we're here for now. I'm going to click off the lines here, and what we're going to do is we're going to change our chart from Euro USD to US 100, and I can do that by dragging it onto the screen here. You'll see it now switch over to US 100, and now you can see that stop loss says 20, and that's wrong for a commodity. So what we want to do here is come in here and type 2000. This is the equivalent of 2 pips on a commodity such as US 100. So now when I put the lines on, you'll see we've got the number 2000 here, and if I just zoom around, you'll notice the 2 to 1 still applies, 2000 and 4000 here, where we've got a $1,000 trade in place, risking $1,000 to win $2,000. So that's the number that you need to get your 2 pip minimum on. So the minimum number would be 2000. You could have anything above that if you're on a commodity like US 100, and the number will be 20, which is 2 pips equivalent if you're on a currency pair such as Euro USD. Hopefully you found this useful, and thanks very much for watching.
Thanks, Steve. And that's the kind of thing we do. We educate as we go. But the trade assistant is invaluable. We got to do a new one of those because we are showing the older version, and the newer version looks slightly different, not too different, not too dissimilar though. And I'm sure we'll do that in due course. But yeah, the trade assistant is invaluable because it works out your lot size as you're going. I mean, if you had to do it manually, because we're on the minute time frame, working out the exact lot size would take well, quite a bit of your time. And as you can appreciate, you could get yourself in a bit of a panic if you're on the minute time frame and wait for all this to go red, 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 or green, green, green for a buy, etc. But this does it all for you. So really quite an invaluable tool. Feels like they've sort of had a look at the news on the euro, and obviously the euro's going down. But we're creating imbalances that need to be filled. That one was filled by that wick there. And indeed, imbalances, although they need to be filled, they could last sometimes hours, days. It's really up to them. But they do need to be filled at some stage. I do feel that we are possibly at this moment in time going down to these levels down here where the buy zone is, maybe possibly down to even this support and resistance line that we drew up earlier on. Again, let's go and see if we can find any trend lines or anything on the 5-minute time frame. And as we can see, there's sort of a trend line there, look. And also creating lower lows as we go down, sort of a parallel trend, sort of. These act like support and resistance lines. So one could determine if we have a candle goes above there, we might have a breakout situation. And indeed, if the candle goes down below this trend line here, we would have a breakout that way as well. This is on the 1-minute time frame. Like it's yeah, it's going lower, which doesn't help us at all. But you can only trade what the market is prepared to give you. I'm on the 5-minute time frame now. There's a imbalance up there on the 5-minute, but that could be filled in later on today or tomorrow. Yeah, so we are creating lower lows now. So it does seem that we are committed to go even lower. Like I said, it doesn't help us with the trade, but like I keep saying, that's fine. You're not losing any money. But I appreciate you're here to trade. But you can only trade what the market is prepared to give you and what you feel you're comfortable with. I mean, these trend lines are very subjective. That's why I hardly ever use them. But it can be used to give you a general guide sometimes. I never trade off them myself. Trust in the Academy 55 indicators and the zones a lot more than those trend lines. But it's just a general indicator to show you what generally is happening. And as you can see, we have a breakout of lower lows, so more of the same, I guess. Possibly going down to these levels here, or even that level's the first one, the support and resistance line that was drawn up on the minute time frame. Could be bounce or break. And if it breaks, could be going down into this buy zone area here. But we're staying nice and safe at the moment, not spending any money. The reality is that me personally, I've got 4% already to my 10% target for the month, and it's only the 7th of October, so I'm in a happy place at the moment. Quick look at that. There we go. Not only one win with a 2%. Even the last one was only 0.2%, but it all adds up, giving me a total of 4.4% for the monthly target of 10. So I'm nearly halfway there, as you can see. So, and once you get this this journal, you can write in how, oh, hang on, how you felt about the trade. The market looks nervy, low liquidity. That's why I only got what I did, a bit of an opportunist trade there. Volume running low, liquidity running low. I took this trade here and it reached the purple line, the EMA 462. So that's why I took out where I went, why I did what I did. And like I say, you can only trade what the market is prepared to give you. Let's see, we have a bit of a volume coming in for a bit of a buy. Let's see if anything happens here. Possibly not, because we're creating new lower lows going past that trend line we drew up earlier on. Could be really bad news for the French. Worse news than it was for the dollar, maybe. But we're trading what we see, not what we think. And all the time, the Academy 55 indicators are keeping you respectable and decent by showing you where to put your stop loss. The indication of red for a sell, green for a buy. So if my lifestyle allows it, I could be coming back later on today, possibly on the US 100. If my lifestyle doesn't allow it, no problem. I'll come back tomorrow at 8 o'clock with you guys. Tomorrow morning and have a look again, where no doubt the political landscape and the market landscape will be different. We'll see if the market is prepared to do anything for us then. But all the time, I have no pressure. I don't feel any pressure to trade because of the low target that I achieve monthly. As I said you earlier on, I'm already 4.4% up, and it's only the 7th of October, so a long way to go in the month yet. And even if it was the 26th of October, I'm going to trade what the market is prepared to give you. And 4.4% on a $100,000 account is the equivalent of 4,400 US dollars, which by the time FTMO take out 80%, got maths this early in the morning, mental maths as well. I haven't got a calculator, which would be what, roughly, let's say $3,600. $3,600 was the equivalent of about 3,200 quid, which is well over a average monthly wage in Britain anyway. So even at that, as you can see, so there's no need to panic. Get a grip of the value of money. Dispel all those fears of missing out, FOMO. Relax. Be prepared to take what the market gives you. No FOMO, fear of missing out. Be prepared to take only decent trades that you can see with our indicator. Come on, let's see if we have a final push for maybe a bit of a buy before 9 o'clock. You never know. Right, let's have a look. So there's a buy alert. Which disappeared. As you can see, even though we've got a buy alert, we're all in red at the moment. Tapping into this fair value gap here. But it's creating other fair value gaps down here and over here. The wave is just starting to turn green, but it's very tentative. Green volume wave. There's no volume or liquidity in the market. Really, it's not a good deal at the moment to trade. And as you can see, it's not very inspiring, is it? So with that being said, guys, with that being said, I'm going to take my leave now. Been on with you guys for an hour. I may come back later on today, depending on the lifestyle. I mean, no panic too. You shouldn't be either. You can only trade what the market is prepared to give you. Take it nice and relaxed. You haven't lost any money, so that's good. Really good thing. Really good. And keep your powder dry and come back when the conditions are a lot better. So thanks very much, guys, for coming along today, and I will see you tomorrow. Cheers for now.